China's infrastructure boom gets swamped with the aid of property woes. China's infrastructure stimulus is boosting financial pastime, but it's now not big enough to offset the hit to production resulting from the continued property slump, high-frequency facts show. Spending on areas such as water, roads, communications and healthcare centers has been developing at double-digit quotes for the beyond months as compared to closing year, consistent with Goldman Sachs calculations based on official information released this week. That is up from almost zero growth remaining 12 months, consistent with the respectable facts. The enlargement is showed by using satellite photos of avenue construction projects in 13 provinces analyzed by using Foursquare's Technology Limited. They estimate the region of roads below construction grew 6.3% in July from the preceding year, a turnaround from in advance this year, whilst it turned into shrinking. However, that isn't doing sufficient to revive China's enormous creation area. Foursquare's records show the place of land blanketed by means of construction projects launched in July inside the three largest city regions around Beijing, Shanghai and Guangzhou fell 44% in comparison with 12 months ago. The general area of land included through new and ongoing production in those town regions fell 1% in July in comparison to 12 months earlier. The cause is plunging property funding. A liquidity disaster among China's belongings developers has led to a plunge of their new projects and positioned about 5% of present condominium production on hold, equal to an envisioned 500 million rectangular meters of ground space, sparking loan moves via angry homebuyers. Construction interest is down nationwide as a result, with statistics from Japanese organization Komatsu showing heavy equipment became used less in July than inside the equal month ultimate year. That drop was also visible in call for business goods ultimate month, with metal output falling to its lowest stage considering 2018 and cement manufacturing down 7% from the preceding year. With Beijing but to announce a complete plan to ease economic pressure within the property zone, there seems to be little desire of uncommon creation healing. Excavator income, a signal of creation enterprise expectations, fell 25% in July. China's local governments have issued a file quantity of special bonds in particular used to fund infrastructure funding, and Beijing has known as on state-owned policy banks to help steer funding to initiatives. The Securities Times said in an observation Wednesday that infrastructure initiatives make up nearly a fifth of China's overall extremely good nearby forex loans and could stay the main recipient of long-term loans to the company sector this year. What Economics says, a pickup in China's COVID-19 cases and the deepening housing hunch are increasing stress on intake and pockets of manufacturing, high-frequency information display. The readings help our view that a recuperation within the second one-half of the 12 months will be a fight. David Koo, China economist. Infrastructure investment is likely to boost up further and ultimately develop 10%-13% this year, in line with Le Shaw, leader Asia economist at Banco Bilbao. Given that infrastructure funding is around 15% of China's total gross domestic product, that would drive 1.5%-2% of general actual GDP increase, he estimates. But a possible double-digit decline in assets funding means that the overall contribution of funding such as in manufacturing centers to GDP will be less than last year's of about 1.1%, he introduced. China's infrastructure investment this 12 months has been concentrated in urban infrastructure, water utilities, telecommunications, electricity era and healthcare facilities, in step with reputable facts, with shipping spending developing more slowly. There are large regional disparities, with Hubei province recording a near 22% boom in fixed asset infrastructure funding within the first one-half of the year, while lockdown hit Shanghai noticed that spending fall 38%. Copyright 2022 LP.